put it simply, the current housing market is crazy. Just the other day, I was reading an article and it talked about the cost of renting versus buying a house, and it blew my mind. It showed that the cost of renting versus buying the exact same house in Los Angeles would cost you a little over $4,000 a month to rent and over $7,000 a month to purchase the home. This finding was so interesting to me that I dove down a rabbit hole to see if this finding was specific to LA or if this was a trend nationwide. And lo and behold, studies show that renting is more affordable in the 50 largest metro areas in the United States. Now, if you're anything like me, you've probably heard your whole life how purchasing a home is far superior to renting. And although historically this may not have been far from the truth, the current market may tell a different story. If you stick around, I'm going to provide you with the current data about renting versus buying, the arguments in favor of each option, and why ultimately right now, the decision isn't as easy as it was in the past. Let's start with talking about the different costs that are associated with buying a home. The first one being the down payment. See, although there are some low down payment options like an FHA loan or Rocket Money's 1% down offer, generally, lenders will require you to put down 10 to 20% of the home's purchasing price up front. And let me tell you, 10 to 20% isn't cheap. Let's take the median US home price of $412,000, and you're looking at a down payment anywhere between $41,200 and $82,400. The second expense is your mortgage payment. This is your monthly payment to the lender that consists of money towards not only your principal amount, but also interest. And unfortunately for borrowers, mortgages on a typical home have nearly doubled in just the last 4 years. This is propelled by the highest interest rates we've seen since the early 2000s at over 7% interest rates. This amount you pay in interest doesn't help to build equity at all, and once it's paid, it's as good as gone. The third cost that also disappears into the abyss is if you put less than 20% down, you have to pay for private mortgage insurance, or PMI for short. See, PMI is an added fee that typically costs between 0.5% and 2% of your loan balance per year. That is paid off to the lender to help cover them in the event that you default on your loan. The fourth expense to consider is property taxes. See, property taxes are costs that you will have to pay regardless if you've paid off your home or not. And they can range anywhere from 0.32% to 2.21% depending on the state you live in. And to make this even worse is property taxes tend to go up over time, so this will only get more expensive. And to keep going, there's homeowners insurance. This amount ranges greatly due to different factors such as home location, likelihood to make a claim, and your home's replacement value. And according to analysis done by Forbes, the average homeowner's insurance costs $1,678 a year. And finally, the last expense is ongoing maintenance and repairs. See, when you own a home, you're responsible for fixing everything that goes wrong. Faucets will leak, drains will get clogged, water heaters will break, and so on. That's why it's generally a good idea to expect to pay roughly 1% of your home's value for repairs each year. Now that we understand all the different costs, let's put it all together to see how much it would cost per month to own the typical home in America. With a median purchase price of $412,000, we will pay $41,200 upfront. That leaves us with a mortgage of $370,800. Assuming a 7% interest rate, our monthly payment will be $2,467. Add on a low PMI of $159 a month, insurance of $140 a month, property taxes at 1% a year equaling $343 a month, and another 1% of the home value at $343 a month for maintenance. This all totals to a monthly cost of $3,452 on top of the $41,200 down payment. As you can see, your monthly home cost is much more than just your mortgage payment. This is definitely something to keep in mind when buying a home. Now that we understand the costs associated with buying, let's talk about rents. The situation here isn't great either. In fact, rents are at record highs in many places around the United States. Even worse, rents are increasing at a greater rate than wages, making renting more unaffordable. Since 2019, rents nationwide have jumped more than 30%, with wages only increasing 20%. As for the average rent across the US, if we're looking at a 3-bedroom place, it will cost you $2,174 a month. In terms of other costs when renting, there are relatively few compared to buying a house. Some you may come across are monthly fees for things like parking or pets, but generally these fees are limited. As you can see, the great thing about this is that there are a lot less hidden costs when it comes to renting. If the faucet breaks, it's the landlord's job to fix it. If the roof needs replacing, the landlord has to pay the cash. This is a major pro because as a renter, you don't have to worry about the maintenance and repair of the home outside of the things you directly break. You just pay a flat monthly rate and the rest is on the homeowner. Another major pro of renting is the flexibility that comes with it. If you want to, you can pack up and leave at the end of the contract. There's no hurdles to jump through to sell your home before you leave, and it's all over at the end of the term. Another argument in favor of renting is that if you plan on living somewhere for roughly less than 7 years, it's cheaper to rent because you won't own the home for a long enough time for the benefits to outweigh the closing costs of a home. These closing costs usually amount to anywhere from 5 to 6% of the selling price of the home, which can be tens of thousands of dollars. As for the arguments against renting, there are two main ones I can think of. The first one being is that your price isn't locked. Unlike a mortgage that is fixed amount for the entire 30-year period, rent can be increased year to year. This makes for unpredictability in housing costs and doesn't help for peace of mind. This builds onto the next point, which is that you're at the mercy of the landlord. If the landlord wants to stop renting out the home next year, they can't, and you have to go out and find a new place. Now that we've gone over the pros and cons of renting, let's talk in terms of home ownership. When it comes to long term, owning is generally profitable. History has shown that even when prices have gone down in the short term, they rebounded and built back up over time. As such, owning a home is a great net worth builder due to the generally increasing property values over time. The other major positive is the peace of mind that comes with owning a home. The payments are fixed, and you know that if you make all of your payments, then at the end of the period, you own the home. You don't have to worry about rental price increases or dealing with landlords. Really, you just have to keep up with the property tax and maintenance, and you're set. On the other hand, one major downside to home ownership is that you're tying up a lot of money in your down payment that cannot be used elsewhere. Depending on the price of a home, that could be a considerable chunk of change that can't be invested or put towards other things until you decide to sell the home, which by the way is not guaranteed to be a quick process if you do. Another downside to owning is that there's no guarantee that you like the area you buy in. You may come to find that you hate the neighbors, but because they own their house and you own yours, you have to put up with them until one of you decides to finally sell. Also, areas change over time and sometimes they deteriorate, become more dangerous, lose the shine that they once had that you fell in love with. There's no guarantee that you will love the same place in even 5 years' time. Now that we've discussed the costs and the pros and cons, I'll tell you what I think is best. With where the market currently stands, I think that for most people, renting is the better option. With super high home prices and high interest rates, it's so expensive to own right now that I personally would hold off on buying a home until one or both of those factors decide to go down. But who knows, in a year's time, the market may look very different and supply could be abundant, driving prices down along with lower interest rates, and it may be a great time to buy. However, for the meantime, unless you are absolutely certain about where you want to be, prepared to pay the higher costs, and really desire that peace of mind that comes with owning a home, I'm thinking that renting is a great option. With that, I really hope this video helped you if you find yourself in this predicament, or that maybe you just learned something interesting about the housing market. I really enjoyed researching this topic, and if you'd like to see more financial information videos like this, please consider subscribing and have a great day.